Yeah, I found this really, really interesting, and I guess I sort of sparked a little bit of research from myself this week into sort of errors like this and how they can impact different markets. Now, this was something out of Europe, and we saw, I guess, what we call a flash crash on Monday in some European markets. Now,
which European market?
So we saw the Swedish benchmark index, which is the OMX Stockholm, that fell nearly 8%. The equivalent index in Denmark fell about 6%. And then the French, Dutch, and Belgian indexes also dived as well, anywhere between 2 and 4% as well, within about 10 minutes. So I'm going to quickly pull up a chart here, just so you can see how this actually looks on an index tracking chart. Now, that is this OMX Stockholm. And that you can see is that's within 10 minutes, it's dropped 8%, and then almost gained all of that back instantaneously. Now, that's a pretty, I guess, considerate move when we talk about, I guess, the way an index generally moves. So, quite ridiculous. And I guess the reasoning for that was there was an error made, correct, on a Citigroup trader at the trading desk in their London office.
Someone's getting fired.
Yeah, so he input a whole bunch of sell orders by mistake. There's no details in particular on what they were, but as you can see, pretty, I guess, sharp impact on the market.
So just a fat finger, basically.
Literally a fat finger error. Now,
mate, imagine the compliance officer doing that stuff.
Yeah, exactly. That's the thing. There's not a lot you can say about that, right? It's still, I guess, when you come down to trading now, it's all still comes down to, human input, right? So there's the ability to make those errors quite, easily. But I did a little bit of other research. Obviously, there is a lot of money flowing through the markets every day. It's very simple to make, I guess, mistakes like this, especially when it comes from some of the big institutions, can have a massive impact on markets. So I did a little bit of research, and I found a few other errors like this in the past. There was one in 2009 where a big oil trader in the US was on a bit of a bender, apparently. He placed around $520 million worth of trades for crude oil. And these positions were unwound within the trading day, but the company lost $10 million.
Wow.
So
surprised there wasn't more, to be honest.
You think about $500 million down on crude oil. To be fair, unwound the positions. I think it was within a couple of hours, but still $10 million in losses. Like it's very. I guess that's a bit of a different. I guess being on a bender and a fat finger, two separate. I guess things to be discussing. But it's interesting. Citigroup have actually had a bit of a history of this in the past. Having some untimely errors. We saw in 2020, regulators actually cracked down on Citigroup just based on some of their processes, making, I guess, these errors more common than other institutions. So they actually, I guess, they were awarded a big fine. That's not really an award, is it?
But hey.
Yeah, they were given a big fine, about $400 million US. They were fined because their processes and systems didn't really, I guess, the fact they are making quite a lot of these errors, their systems weren't really in place to safeguard the bank from these errors. So pretty big impact, I guess. And the worst part about it is we did see the indexes come back pretty quickly, because once the news was released that it was an accidental trade, all those gains were made back. But yeah, the indexes over there have said that they're not necessarily going to unwind the trades for Citigroup, so it could actually lead to some pretty big losses on their part as well.